Good afternoon, my fellow traders. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another live charts in action where we're going to be looking at silver. Now, the reason we're looking at silver is because it is the best performing asset of 2026 so far. In terms of its price movement, in terms of its volatility, it's increased more than any other asset so far this year. Now, it has been consecutively increasing in value day after day. Now, there's been a lot of reports this morning, especially during the Asian session and first few hours of the European session as well, indicating that the trend has come to a pause, the trend has come to a halt. And even though we have seen a retracement, ladies and gentlemen, because yes, it has been consecutively every single day increasing in value for 4 to 5 days now, it did retrace, but sometimes the news can be misleading. There is a pause, it did retrace, it did dip, but nonetheless, if we're looking at technical indicators and also fundamental aspects which are driving the price, it's not necessarily seeing any indications yet materializing, indicating a prolonged downward trend. Like I said, it is still the best performing asset of 2026, even though that we have seen this dip. Now, if we're looking at previous dips, ladies and gentlemen, so if we're looking at price action in terms of analysis, we can see that the dip that we have seen is a smaller dip than that which we have previously seen. So for example, if we're looking at the 8th of the month, ladies and gentlemen, we can see the price decrease by more than 10%. If we're looking at earlier decreases towards the end of 2025, we're looking at 9.5%. In the middle of December, towards the end of December, we were looking at 16%. Now, we saw those dips, but the trend upward has continued, like we did see throughout the whole of 2025 as well. So not just this year. Now, if we're looking at the dip that we have seen so far, ladies and gentlemen, the dip measured almost 8%. So we're still well in range of previous retracements. So we haven't yet, in terms of price action, got any indications that the price is going to see a correction or complete change in trend. So for example, a bearish trend. Now, if we're looking at our indicators on a 2-hour time frame, because the 2-hour time frame has the benefit of both certain aspects of longer term time frames and shorter term time frames as well, because it is categorized as a medium term time frame. Very, very famous and used by for example, session traders and swing traders. Now, if we're looking at this time frame and we're looking at our indicators, we're still trading above the 75 bar exponential moving average, which is key in terms of getting an indication of whether buyers or sellers are controlling the market, using it as a trend line in terms of the price condition and so on and so forth. So we're still trading above the 75 bar EMA. If we're looking at the 100 bar EMA as well, which is, should we say, slower to react, mainly used as a price indication, a price condition indication, we're still trading significantly above that level as well. So even though we've seen that dip, we still at all times on this time frame, we're getting indications that yes, we are retracing, we are seeing a dip, but the upward trend is still currently the signal from these two moving averages. Now, if we're going to look at other indicators such as oscillators, if we're looking at oscillators, for example, the RSI currently is trading at 59, at the 59 mark, almost at the 60 mark. So very clearly an indication again that we're not at an overbought price and that buyers are controlling the market. If we're looking at the MACD, ladies and gentlemen, we are trading below the signal line, but we are trading on the positive side of the MACD. And if we're looking especially over the past 2 to 3 hours, we're seeing higher bars as well. So that still, ladies and gentlemen, is giving us a bullish bias. So on this time frame, ladies and gentlemen, we can see that we are seeing still indications given a bullish bias that the price is going to continue moving upwards. Now, of course, we always need to take into consideration scenario outcomes. And if the scenario is going to change for whatever reason that may be, so for example, if we're going to see downward momentum be regained, if we do form a breakout, for example here, a bearish breakout, which is the first bearish breakout that we would have seen in quite a few days, then that scenario changes because we've got a bearish breakout. Most likely we'll drop below the 50 level on the RSI, and probably because this moving average will keep moving upwards, we would also drop below the 75 bar EMA. So if we do get that scenario, then of course that buy signal starts to fade. But at the moment, it is still intact. Now, if we're going to go on to smaller time frames, so for example, if I'm going to look at the 30-minute time frame, still looking at silver, ladies and gentlemen, the latest crossover is an upward crossover. If we're looking at the actual dip, ladies and gentlemen, as well, if we're looking at this overall retracement and the upward price movement, the upward price movement has crossed above 60%. Now, some theories in regards to retracements are that a retracement is anything up to 50%. Some people believe it's anything up to 60%. There is other theories as well. Nonetheless, we're trading above both 50 and 60%. So that's a significant price movement for it just to be solely a retracement and then the continuation of the downward trend. Again, this is based on price action theories. It is something we have to, of course, monitor. This is only the potential indication. But at the moment, this is also another positive indicator for upward price movement. If we're looking at the RSI, we're still trading above on the RSI. Stochastic oscillator is also extremely high as well. Now, what we would, of course, like to see in order to support this price movement, ladies and gentlemen, and I'm going to put some period separators for this, just so we can see the price movement of the day. Ideally, what investors and traders would like to see is that the US dollar, because the US dollar, generally speaking, 2026 has been performing extremely well, because for the first quarter of this year, a lot of economists and traders believe the Federal Reserve is not going to cut interest rates, which is why also there's a lot of support for silver, because there is political pressure now on the Federal Reserve, and there's also political risk because of the independence of the Federal Reserve for them to start cutting interest rates. Because of that uncertainty and because of that political risk as well, and the risk to the Federal Reserve as well, a lot of people are investing in safe haven assets such as gold. Of course, silver is not a safe haven asset. However, it does have a very strong correlation with gold, which is a safe haven asset. But of course, what we'd like to see is for the US dollar to decline in value. At the moment, it's trading slightly higher. If it starts to decline, because at the moment it's slightly retraced, but if it starts to decline, so for example, trade below the most recent breakout, which is at this level, then that really starts to strengthen the position again for silver. So that's a potential scenario that, of course, we can look at. Now, if we look at today's article, which was also looking at silver, we signaled a very key area within the market. Why is this a key area? Because number one, that's a resistant level. Number two, that's a breakout level as well. And the third, and also extremely important scenario, is that it is more or less in line with the 200 bar simple moving average on the lower time frames. Some people look at the 5-minute time frame, some people look at a smaller time frame. Even if we're going to switch over to a smaller time frame, so for example, looking at a 4-minute time frame, again, it's more or less at this level, the 90.175.76 level. Now, we pointed that level is where, based on the 200 bar simple moving average and based on price action, we start to get indications that the price is going to increase in value. Now, since that, ladies and gentlemen, since that article, since that level, it already increased by 140%. Now, 140% increase is a significant increase in just a very small period of time of, for example, 45 minutes to 1 hour. So a lot of people may have already hit their take profit. Nonetheless, though, for those individuals that haven't, the only thing that we need to be cautious about, because whenever we get a breakout and whenever we cross above the 200 bar moving average, a lot of the time it does retrace. Even as I'm saying it, we can see it is slightly retracing. So we need to be slightly cautious about it, for example, retracing back to this line here, or maybe slightly lower, so back to the 200 bar simple moving average. If it does retrace, it's not an issue because we still will be seeing higher lows and also higher highs. And if we're looking at the RSI as well, the RSI is seeing very clear convergence and not seeing any indication of divergence or an overbought price. So even if we do get a slight dip, then we still can take into consideration the renewed upward price movement. So for example, a lot of people may wait for the momentum to regain at least 61%, so we are out of the range of a potential retracement. So for example, if the price increases back above this gray line here, if we do get a dip, for example, like I said, to this red line, if it regains momentum, moves back above this gray line, then we start again to get an indication of potential renewed upward price movement. Now, if we're not going to get this retracement, then of course we have our breakout level here, which is also a very key area for us to monitor. So, ladies and gentlemen, we've looked at what indications are pointing to and potential scenarios. We've looked at the latest developments in terms of silver. Like I said, silver is the best performing asset this year. It has been confirmed that most of the demand coming, which is triggering this upward price movement for silver, is not coming for demand for physical metals. So the trade war, should we say, and tariffs and so on and so forth aren't having a massive effect other than its, should we say, domino effect, the ripple effect in terms of the risk appetite of the market. Most of the demand is coming from institutions and institutional traders. That has been confirmed, ladies and gentlemen. What's driving investors is the volatility, is the trend, is the safe haven element to it as well. Like I said, silver is not a safe haven asset, but it does correlate with gold, which is officially a safe haven asset. Other factors supporting this is, like I said, the Fed independence, geopolitics, especially in regards to Iran, Greenland, and Venezuela as well. So a lot of factors pushing the price upwards. The main concern and main risk is an expensive US dollar, because the US dollar has risen this year. If it continues to rise, it can pressure both gold and silver because there is an inverse correlation there. So that is something we need to keep an eye on. Ladies and gentlemen, hopefully you found today's session educational and informative. Enjoy the rest of your day. Hopefully we'll see you on our next session or on our next webinars, which you can get access to for free. In the meantime, enjoy the rest of your day and goodbye.